Alright guys, I hope I'm not freaking you out, but here this week, the rise of the Gru. So Minions is coming out, I'm all decked out. My office didn't think I would actually do this, but I guess for your entertainment today, I'm supposed to be dressed up as a minion. This is according to Sarah in my office, so I hope I look like a minion. But announcement here today, if you have been getting our mailers in the mail, we've invited our clients and our partners, obviously, to a movie on July 16th. Rise of the Minions, or Minions, The Rise of the Guru. So hopefully you can attend. You just need to call our office, contact us. We can get you on the list if you're paying attention to these videos. Hopefully you are. And that's our announcement for the week. But we're going to get into Mortgage Matters in a minute. So let me get this taken off so we can get all serious here. Aren't we crazy at mortgage specialists? I don't know. Whatever. So anyways, this week, are you a first-time home buyer? This week's Mortgage Matters in Minutes. I'm Brent Rasmussen here for your Mortgage Matters in Minutes. This week is, are you a first-time home buyer? And we have a little PowerPoint presentation to put together for you because we get this question quite often that I am a first-time home buyer and I hear there's certain special programs that are available for me and I like to know what those are. Many times we have different discussions about those and which ones are impactful, which ones are just kind of, in my opinion, more marketed than any real impact, speaking on those kinds. So you still, as a first-time home buyer, have to qualify with your credit, with your income, and with your assets. And so today we're going to talk about a couple special programs, and hopefully I'm going to be able to get my screen shared here for you so we can kind of show you just a couple items here that we have set up. And I know on Instagram you're not going to be able to see this, but you will here on Facebook be able to get to see our PowerPoint presentation. But let me get this shared on our screen here. You should be able to see here, middle screen, Fannie Mae and Freddie Mac. Those are the two large entities that do conventional loans. And each one of these entities have their own special first-time homebuyer program. One's called HomeReady by Fannie Mae. One called Home Possible by Freddie Mac. Both great loans. Both have been around a long, long time. They're nothing new. But what is new is each year they change the income limits in the particular county that you live, and that's what allows you to qualify for these particular first-time homebuyer programs. And what sets them apart is sometimes and generally they give you better interest rates and better mortgage insurance if you qualify for these types of loans. So we put together this slide here, obviously, that if you are in Fannie Mae and going for a HomeReady, your income needs to be at 80% of the median income limit. So the combined household needs to be at $70,160. So for example, if you and your spouse or you yourself make $100,000, you would not qualify for this loan program. Same with Freddie Mac. The income limits there at 80% of their income limits is $76,080. And so if you do make under that, either with you or all borrowers combined, this is what allow you to qualify for this loan program, which allows you to put down as little as a 3% down payment and discounted mortgage insurance as a first-time home buyer. You still can do these programs as well. If you're not a first-time home buyer, but there's extra benefits that are built into this program. So some people hear of the loan called FHA, thinking that is a first-time home buyer loan because they see the letters F and H, and I will tell you that F and H stand for Federal Housing Administration, and it's not a first-time home buyer loan only. Any buyer can take out an FHA loan. The nice thing about FHA is that it allows for lower credit. It allows for lower down payment as 3.5%. Usually FHA has a lower interest rate than conventional loans do. And usually they want to keep your debt to income ratio around 43. Right now, they'll let you go a little bit higher than that, but by FHA standards, they usually state we want to see your debt to income ratio very similar to where conventional loans are. While FHA does not have income limits, they do have what's called loan limit. And here in Douglas and Sarpy County, that loan limit size is $420,680. That includes the mortgage insurance that has to be factored into the loan. So if you wanted to buy an $800,000 house, you still can with FHA. There's no income limits, but you just have to get your loan all the way down to $400,000. Most first-time home buyers don't have a large down payment, and that's what they're looking for when they qualify for a mortgage, is the lower down payment options. That's generally what first-time home buyers are looking for. There are multiple, let's finish up on FHA. The only negative right now we've seen in the last few years with FHA, and we have a blog on this, we've spoken about this, is that sellers feel that FHA is more risky because they allow for lower credit, but also FHA is a little bit more stringent on the minimum home requirements. So things that sometimes get caught by the FHA appraiser would be peeling paint, handrails on steps, non-running water in the property, no heat source, cracks in concretes greater than 1.5 inches, windows that are sealed shut that don't open. There is a laundry list of a few other items, but generally there's only those few items that we just spoke about come up in the process. So if you have a good house that's well maintained, FHA isn't a problem. But because through the years people have seen some of these issues come up and sellers have to fix those issues or pay someone to fix those issues, that's why sometimes sellers don't like an FHA loan compared to the conventional loan that we talked about, which was, Fannie Mae, Freddie Mac's loan. So anyways, those are the options, or a couple options that are established for conventional first-time home buyers. FHA loan is sometimes used as first-time home buyers. There's also NIFA loans, grant money, and some special CRA loans that exist among banks, credit unions, and local institutions that give out local money. So I would tell you most, if not all, first-time homebuyer loans, except for FHA, are going to have income limits. So that's the biggest challenge we ask all of our consumers first, is where is your income at? Do we even qualify for the first-time homebuyer loan first? If we don't, then we look at other, obviously, what we call normal conventional loans and such like that, non-first-time home buyers. Some people, if they're putting down 20% down, might not even want a first-time home buyer loan because they might want to choose to not pay the mortgage insurance. Where sometimes the first-time home buyer loan has discounted mortgage insurance. If you're not needing to pay that mortgage insurance, why take that loan? So here at Mortgage Specialists, again, we're always going to sit down with you to go through all of your options, what's available to you, what the real estate market is actually looking like, and what's working in the real estate market. Goes just because you might want a certain type of loan doesn't mean that all sellers may accept that type of financing. And we've seen that over the last couple of years. I would say that more than 80% of loans that are being done this last few years are conventional loans, where FHA, VA, and maybe the first-time homebuyer loans have a little bit of a stigma that they don't close as often or as on time, and so sellers just choose not to take that risk right now. Hopefully we educated you just a little bit on some of the options for first-time home buyers, and believe me, there's lots to take in there. We're trying to do a quick overhaul of our summary of these types of programs. We're not going to get into every detail in the 7 to 8 minutes that we have together, but that's the things that we can spend more time with you. If you do have questions, you can phone call us at Mortgage Specialists 402-991-5153, or you can go to our website at mtg-specialist.com. We know we're a little late here this week with our weekly update, but we'll see you all next week. Have a great time, and we'll talk to you very soon. Thanks. Mortgage Specialists. Driven, trusted, reliable.